This here is a list of companies based on the share prices performances, and at number 3 you can see TransCentury Ltd with a plus 122%, and following this they have released a report on a major turnaround in 2024. They have reported a profit of 580 million Kenya shillings, that is in the year 2024, after making losses of up to 3.2 billion Kenya shillings in 2023. And they had actually reported more losses in the years before 2023, as you can see in this chart. So the question is, with this kind of growth and the great reports after losses, should you jump right in and buy shares from this company? Let us discuss that and find out if this is the best move to make. In this video, we'll break down the numbers, analyze the risk, and see whether this profit signal real growth or it's just a temporary recovery. If you have an interest in knowing how to grow your wealth and manage your finances, make sure that you subscribe to this channel, because here at Study of Wealth, that's all we talk about. Thank you for being part of this. Now, TransCentury Ltd is a well-known infrastructure investment firm in Kenya. They have been involved in some very notable projects, such as the construction of an oil terminal in Mombasa, worth 2.6 billion Kenya shillings. They have also been in renewable energy projects such as Menengai geothermal power project and more. However, their financial struggles in recent years have impacted their ability to actually expand further. But if they continue stabilizing, they would remain or they would become a key player in this sector. Their financials, 2024 financials, show significant growth, and this improvement, I think, raises a very big question. Can they be able to sustain this kind of growth? Let me share the chart with you here so that you can see the shares, how the shares have been performing over time. And as you can see here, the current price of one share is 1.29 Kenya shillings. And there was a time these prices were at 36 Kenya shillings, yes? So is there a possibility that we can get back to 36 Kenya shillings? Because that will be massive, massive, massive growth. And for people who will get in right now, they'll be able to make a lot of profit if these shares goes as high as 36 Kenya shillings. So let's look at what made them do well in 2024 to actually find out whether the growth is sustainable. So the reason why they had this kind of turnaround is because of a few notable things they did to just improve the company. And I have to say, they didn't just suddenly make money by accident. They took specific actions to improve their business. And you're going to look at these specific actions that they did. And in number 1, they had subsidiary performance boost, where their smaller companies started making money. In number 2, they had strategic debt restructuring, where they were able to actually pay off a chunk of debt, over 40% of it, which made the company more financially healthier. And the third thing that they did, they were able to do operational efficiency and cost optimization, where they were cutting costs to just become more efficient. And the number 4 reason is they also had a successful right issue in 2023, meaning that they were able to raise new money by selling more shares, called a right issue, to get more working capital for this company. And that's one of the reasons why they were able to be in profit in 2024. And the number 5 reason that the profit can be attributed to is the leadership and strategic growth, where they were able to focus on disciplined capital allocation. So in short, TransCentury recent returns to profitability is not an accident, but actually a strategic move. Now, this is the next best part of this, because you see, now the announcement of the profit also has a very big impact on the share prices, because such an announcement affects the investor sentiment and the stock movement. And as we know, the investor's sentiment, or how people perceive a certain share, or how they are seeing that the share is going to play out, it plays a very huge role in how this particular stock or share is going to move. When a company reports profits after years of loss, definitely people start talking. Excitement usually builds, and the demand of the share is going to rise. And due to this, definitely the stock price follows as well. We have actually seen how this share has done, or this stock has done, over the past 1 year, and I believe this announcement will actually push the prices even higher. But here's the thing: in all this, we need to practice caution when going in, because sometimes when the short-term hype is too much, it can actually inflate the stock price. And when this happens, the share become overvalued, even when the company isn't fundamentally strong. And in this case, investors usually rush in thinking that this is the next big thing, and the share price continue going up. So unless this company is able to sustain this kind of growth, those prices might drop again because it was just a hype. While the developments we have discussed are encouraging, the company's future success is hinged on its ability to actually manage the debt obligation, adapt to the market condition, and also maintain the operation excellence. That being said, another thing that is working in favor of TransCentury Ltd is the Kenya infrastructure boom. There is major government and private investment in energy and in construction, and if TransCentury can stay in the game, they'll be well positioned to grab some of this contract and keep that profit roaring. And the big question here is whether they are actually ready to compete, or if the competitors might take those opportunities instead. So for investors, or for you as an investor, this actually presents a very cautiously optimistic scenario, which is very promising, yet it requires a lot of vigilant monitoring just to see how the markets are going to go, or how the company is going to be performing. So if you're considering investing in this company, or in shares of this particular company, ensure that it aligns with your risk tolerance, and also it is a long-term investment strategy. So back to the initial question: is TransCentury a good buy, or is it a good share to actually buy, or is it a good time to actually get into this share? Here is my take. The company has shown very impressive turnarounds with 580 million Kenya shillings profit after years of losses, and it's actually riding in a wave of growing infrastructure sector. However, the turnaround are still fresh, and we are yet to see if it's something that is sustainable, especially with an ongoing debt restructuring. If you're an investor who can maybe stomach higher risk, and you're looking for a long-term investment in the infrastructure space, then this stock can be worth adding to your watch list. So you can add this to your watch list to just see whether it's something that you can take up, okay? But definitely it should not be your first investment or your only investment. So this is for people who want to diversify their investment into other riskier and shares or investment that promises better returns. So before you go in, make sure that you have assessed your risk tolerance, have a long-term strategy, and invest what you can actually afford to lose. Remember to diversify and keep researching, and keep in mind that there are no shortcuts in stock market. The trick is to keep accumulating for long-term growth so that you can actually benefit from the growth of such companies. Now, I would actually love to hear your thoughts. If you're optimistic about these shares, let me know in the comment section. If you're cautious, type more research. And if you think that this is just a hype, drop a big no in the comment section. So thank you so much for watching, and as always, happy investing. Bye.